Hello to all Inderes TV viewers and listeners. Anora reported their Q4 this morning, and we have here for interview both the company CEO Jacek Pastuszka and CFO Sigmund Toth. So let's jump into the questions and maybe starting kind of chronologically from what you actually announced before Christmas with the profit warning and lowering a bit or actually quite a lot then your guidance for the year. So if you just recap what was driving that change.
Yeah, I would say I would start and Sigmund can add a few words as well. I think we were uncertain about how the year will develop, how the last few months of the year, last quarter, especially the very heavy from the seasonal point of view, 2 months of the year, how they will evolve. We all picked up this information about the monopoly business really taking a big turn south. The decline in volumes in monopolies was slightly higher than we all expected. So we were concerned that maybe it will have impact on our overall performance. Now, luckily, in the end, we have managed to deliver quite well on other elements. So it was at the top end of the revised range, yes. But we simply did not feel comfortable confirming the range because of the uncertainty related to the monopoly volumes.
Yes, that's exactly it. I mean, the shipments, towards the end of the year are very heavy in terms of the impact on the profitability, and even sometimes there are shifts between November and December. We saw that, for some of our big brands this year, and then it's very difficult even towards even into December to know if the November performance was weak because volume is shifting to December, or the November performance was weak because actually the overall performance for the Christmas season will be weak as well. So that's one of the reasons.
Yeah, good. And then, like you said, you ended up in the very top end of the revised range. So how would you describe then the Q4 overall?
We're happy, as we communicated in the call as well. I think it's a strong finish to a very challenging year for Anora. But I think we have mobilized ourselves on the agenda that was already established, yes, by my predecessor and by the management team. We have focused specifically on executing the items that we knew that needed to be executed in order to improve our financial performance, and that's exactly what happened in the fourth quarter. So there is no special magic here. We just executed on the stuff that was there already, so to speak.
Yeah, indeed. And you have had troubles with especially the wine segment last year with the profit kind of halving roughly. So now we saw actually a quite good pickup in gross margin and also improvement in the earnings in that segment. So do you feel that if we look at the pricing and gross margins, which was one of the elements you had issues with, is that already in a good level in Europe?
No, it's improving, but I don't think it's already where it should be. We need to keep in mind that strong, I believe, performance by the wine segment in Q4 was very much driven by the discipline in tight management of the cost base. Yes, they have simply implemented savings that needed to be implemented in order to secure financial performance. But some of the underlying issues in this business still exist. Yes, we still have the currency that is maybe more stable than it was, but still not extremely strong. Although the volatility from this will be now reduced because of the hedging. We still see in our base the loss of the contractual volumes that we had with some of our previous partners. So it's still there for a few months more. Yes. So some of the issues that we are facing throughout the year, they did not disappear completely, as they are still there. So on the gross profit level, you still see that we are not where we should be.
Exactly. Then if we look overall, Anora from a market share perspective, perhaps talking about more the full year 23. So how did you see your market shares developing?
Yes. No, as we know, we are not revealing specific market share data per market. It would be a step too far. As I mentioned in the investor call, we are satisfied with our share and top line and bottom line performance on spirits, so no complaints here. Wine is a little bit more complicated for us, especially again the Swedish situation, where we were reporting, and it was the case up until this year that we are number 2. We dropped, I believe, now to number 3, yes, with the loss of these 2 large partners and volumes related to it. We lost this number 2 position. But generally, the market share performance needs to be seen in the context of the price increases we have taken. Yes. So as long as it's relatively stable, or even in a few places improving in the value terms, we are satisfied. Yes. We are not in the market share game as such. Yes. As I communicated already a few times, our priority is to improve profitability, marginality. Yes. The cash flow, the financial fundamentals of the company. Maybe it will give us the firepower to fight for more market share. I trust it will in the end. But for the moment, the softness in our business over the last 3 or 4 quarters very much determined our agenda, as the focus areas. It does not mean that our strategy that we have communicated in November 22, that we have forgotten about it. It's still valid. We still have ambition to improve our market position and also extend internationally. But we need to take a small, I hope, step back, get our act together, yes, bring our house in order from the financial point of view, deliver a few quarters of strong financials to get back on this journey, on this path of improved market position.
Yeah, sure. Then if we look at the dividend, you proposed a unchanged dividends from the previous year, although your earnings did go down and your balance sheet has been at least a bit stretched. Now it was better in the year end, partially due to seasonality. But how do you think about the kind of combination of your result level and dividends and balance sheet?
Yeah, maybe I can speak to that. Yeah. Well, I do think that the improvement in the balance sheet is not only related to the seasonality. I think that there has been a couple of fundamental changes there that have improved our position. Number one is the sale of the Larsen business, so that is net cash in reducing our debt levels. Secondly, we have started selling receivables, which again we consider to be a permanent and then quite significant improvement of the cash position. Obviously having in absolute terms the biggest impact at the end of the year when you have the biggest sales, but having a significant impact also in other quarters. And then last but definitely not least, this is the biggest, let's call it cross-functional effort, is to, after the strong increases in the inventory levels last year with the safety stocks, to compensate for, let's call it instability in logistical market. We have now, through a concerted effort, been able to bring those inventory levels down, even beyond the one-time effect that came with Larsen. So all of that, I think it shows our net debt over EBITDA is half what it was at the exit of last year, and that allows us more flexibility to pay a dividend, and that's something which is very important, I think, to many of our shareholders and thus for us. And then in relation to the result, it is of course true that the result is down, but if you then correct for the one-time impacts that we had in terms of the additional costs related to restructuring, related to integration, and you consider the one-time positive impact from Larsen is something that our shareholders will also benefit from, then actually the proposed dividend is within our 50 to 70% range of such a modified bottom line result. And we think that that's an important signal that within our guidance and within our financial flexibility, we want to regularly pay as high a dividend as we can. Yeah. And then of course, the permanent level of the dividend, the way to continue maintaining or increasing it will then have to come not from one-offs like selling Larsen, but from a fundamental and sustained, we hope, improvement in the performance of the bottom line.
Yeah, sure. Then if we jump to the outlook, you mentioned in the report that you are expecting slightly weaker in terms of volumes in your main markets, which I guess is not a surprise in this economic situation, but are you seeing what kind of dynamics are you seeing during the year? Like you mentioned, Q4 last year already was quite soft, so do you expect some kind of a recovery or rebound towards the end of this year, or do you have an opinion?
If it comes, we'll take it.
Yes.
Very happily. I think it's especially for me, it's very difficult to predict based on the available data where it will go. I think it's prudent to expect that it will continue to be soft and plan accordingly. If the market develops more positively, then we obviously, not only jokingly but also seriously, we will know how to take advantage of it. I know that we will gladly benefit from improvement in the market, but we should not plan for it. So we have quite sober, I think, view on where the alcohol consumption is going in general, where the monopolies are going as well. I would generally expect an increased diversification of channels of distribution for alcohol or ethanol-based products. Also, as the consumer moves towards lower ABVs, also the market for the channels of distribution for these ABVs or for these products extend as well, yes. So I think it's a longer trend that we will see that as the consumer goes down on ABV, the availability of alcohol products or the ethanol-based or fermented products will also increase. Already today, now, when you look at our net revenue, roughly only half of our net revenue is generated by monopolies. Yes. The rest comes from other sources, other channels, other markets, so open markets, international, industrial, obviously as well. Yes. So when you look at the total revenue, net sales that we are generating from monopoly, we are already quite a multi-channel operator. Yes. So the monopoly perspective is important for us, but it's not the only one.
No, exactly. And then jumping to your guidance, you are guiding 75 to 85 on adjusted EBITDA, so meaning some or quite a lot improvement depending a bit where we end up on that range. So what's driving that improvement? It's not the volume from the markets, obviously.
Well, it's a bit of continuation of what led to the improved result in Q4. So it's the full year impact of the price increases and gross margin improvement that we have implemented towards the end of this year. More price increases if needed, and general improvement in the efficiency of our business, while also preserving enough marketing funds to invest. But a lot of it is simply to be a bit blunt, the low base of the first half or the first 3 quarters of this year.
Sure.
As simple as that.
Yeah, that's understandable. And then as a final question for you, Jacek, you have, I think, a bit over legendary 100 days now as the CEO. So yes, you touched a bit on kind of your priorities now for the coming quarters. But is there something kind of in general you want to note where Anora is heading, and when should we expect the kind of company to be at its full potential, which at least I think it's not yet the 24 earnings level.
Yeah, probably not. I hope not. I trust not. This first 100 days were extremely useful. I spent it by interviewing the key people in the organization, talking to them about how they see Anora today and where they want to see Anora in the future. From the business agenda point of view, I mean, my job is both simple and at the same time difficult. It's simple because defining our agenda is quite straightforward. We were able to do it in our first joint call with Sigmund, simply because the 3 poor quarters under our belts, it sort of determines the subjects that you have to focus in. I mean, it narrows the number of choices that you have. You have to deliver here and now. You have to focus on what's already on the agenda. You just need to execute it, yes, and identify the things that have the biggest impact on things for the lack of which we were penalized, yes, like the poor financial performance, like the inadequate level of dividend in the opinion of investors and the market. So my agenda from this point of view is relatively straightforward, maybe not simple, but definitely straightforward, easy to define, yes. The execution part of it is obviously a bit of a challenge always in any organization that you join, but I'm happy to say that the level of support from the Anora folks to both the agenda and to me personally has been good. My learning trajectory had to be really fast to catch up with the expectations of the team, but I think we are on a good track, and I think Q4 results are also demonstrating this, that when we know what to focus on, we can really deliver.
Yeah, good. Thank you very much for the interview, gentlemen, and good luck for the year.
Thank you very much.
Thank you.
Thank you.